Hello everyone, welcome to Cheongfuli Weekly Report. We bring you the latest price and market analysis of China's steel market every week. Spot prices edged lower this week. Up to now, spot rebar prices have dropped 10 yuan per ton week on week, while spot hot-rolled coil prices have fallen 30 yuan per ton. Prices have fluctuated recently, market trading sentiment swings sharply, yet overall activity remains sluggish. From a macro perspective, overseas geopolitical risks keep escalating. The US continues to deploy more troops to the Middle East this week. Trump stated that he is seriously considering launching major military operations against Iran. In response, Iran said it will keep counterattacking until US military operations cease. Overseas market sentiment may stay volatile in the short run. On the supply side, total supply posted a mild increase. Total output of the 5 major steel products reached 8.3743 million tons this week, rising 116,100 tons week on week. Meanwhile, molten iron output continued to decline this week. By product, rebar output rose to 2.0144 million tons, up 46,000 tons week on week. Hot-rolled coil output also increased to 3.0202 million tons, a week-on-week gain of 45,400 tons. Demand weakened week on week. Apparent steel consumption stood at 8.2408 million tons this week, down 196,000 tons week on week. Specifically, apparent consumption of rebar was 1.9622 million tons, falling 82,200 tons week on week. Apparent consumption of hot-rolled coil hit 2.9924 million tons, a week-on-week decrease of 27,800 tons. Demand has softened this week. Amid the traditional off-season, the market holds relatively pessimistic views on future prices with weak speculative buying interest. In terms of inventories, total stocks of the 5 major steel products saw a modest buildup. Combined inventories amounted to 16.2941 million tons, growing 133,500 tons week on week. Breakdown by product, rebar inventories reached 6.9770 million tons, rising 52,200 tons week on week. Hot-rolled coil inventories stood at 4.3855 million tons, up 27,800 tons week on week. Overall, China's steel market trended stable to weaker this week. The industry features rising supply, weakening demand, and mild inventory accumulation, with fundamentals deteriorating week on week. The market has entered the traditional consumption off-season. Construction progress of end-user projects slows down, downstream purchasing sentiment is tepid, and incremental demand remains limited. On the supply side, steel mill profits keep shrinking. Coupled with seasonal concentrated maintenance across the sector, molten iron output will fall steadily, continuously easing pressure on steel supply and demand balance. On the cost front, sustained US-Iran tensions keep oil prices elevated, offering interim cost support to raw materials. Market participants remain cautiously pessimistic over the outlook. Steel prices are likely to maintain volatile movement in the short term. For subsequent trends, key focus should be placed on US-Iran conflicts, as well as changes in steel supply and demand and coal mine resumption progress. Based on the above analysis, the operational suggestion is to adopt a demand-based procurement strategy and strictly control inventory risks. Institutional analysts hold the view that the steel market is currently in the traditional off-season, and weakening demand will continue to weigh on steel prices. Nevertheless, steel mills have recently launched concentrated maintenance and production cuts, leading to a steady decline in molten iron output, which continuously eases the inventory accumulation pressure amid the off-season. In addition, the resumption pace of domestic coal mines remains slow, providing cost support on the raw material side. Going forward, market participants will focus on policy positives unveiled at key domestic meetings scheduled for late July, which may boost market sentiment. Steel prices are expected to fluctuate sideways in the short term. In summary, steel prices will generally maintain a volatile trend. Close attention should be paid to changes in steel inventories, domestic macro policies, and the supply of coking coal. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.